There is a growing number of Australians looking to diversify their wealth internationally, not just for growth, but for long term protection and succession planning, as well as tax alignment. And while Cook Island Trust or Caribbean Trust gets a lot of attention, they often raise compliance questions with the ATO or the Australian Tax Office. Now, imagine a structure that is clean, internationally compliant, and sits in a globally respected jurisdiction with no secrecy, no tax evasion risk, and no need to hide anything. That's exactly what a DIFC Foundation offers. And if you are an Australian citizen considering one, there are a few critical things that you need to know. From setup cost and strategy to ATO reporting obligations and banking implications, and we are going to cover all of this today in this video. Before we start, my name is Shiraz Wahid and I'm the co-founder at Leopardus Wealth, where we have helped many of our clients and families with trust, foundation, and other asset protection strategies in Dubai. If you would like my help in doing the same, you can apply for a free and customized asset protection plan by clicking the link in the description below. Now, let's start with what a DIFC Foundation actually is. It's a legal entity established under the Dubai International Financial Center, an English common law jurisdiction with its own independent legal and regulatory framework. The judicial system is quite similar to what we have in the UK or Australia. Foundations has no shareholders. Instead, it's governed by a council and can be structured to hold assets for specific purpose or for the benefits of the named beneficiaries. That flexibility is what makes Dubai foundations so powerful for succession planning, holding companies, or asset protection. What many Australians find valuable is that it's not an offshore trust in a traditional sense. It does not trigger the same ATO scrutiny that discretionary trusts in tax havens often do. That's because a DIFC foundation operates in a fully transparent, audited, and regulatory environment. DIFC has a public record of registration and a private register for beneficiaries. Now, if you are an Australian tax resident, you will still have the reporting obligations. The ATO takes a worldwide view of your income and control. If you or your family are the beneficiaries, or if you retain effective control over the foundation's asset or decisions, then the Dubai Foundation may be considered a controlled foreign trust or company. And that means you will need to disclose it under the Australia's CFC and attribution rules. But that does not make it ineffective. In fact, with the right structuring, especially through a protector or a third-party council member, you can distance yourself enough to reduce exposure. The key is to have a proper setup and documentation. And that brings us to the process of setting up the Dubai Foundation itself. Setting up a DIFC Foundation is relatively straightforward, but not something that you should do without guidance. And a registered agent service is also something we provide at Leopardus Wealth. Your registered agent will help you draft a charter and bylaws that outline the governance and appoint the council. If you want confidentiality, the registrar allows nominee councils and optional privacy over beneficiaries. The costs are also very manageable for what you get. You can expect to pay around 5,000 to 6,000 US dollars for a full setup, including government fee, drafting, and agent services. Annual renewal and registered office fee are roughly the same per year. Compared to offshore trust with similar protection, this is often more cost effective, especially considering the banking access and regulatory clarity. Speaking of banking, this is a major reason Australians are choosing the DIFC foundations. Unlike most offshore structures that struggle to open accounts, a DIFC foundation is seen as a credible client by banks in the UAE, Switzerland, Singapore, or even within the EU. This is especially useful if you're holding liquid assets, investment portfolios, or wish to operate a family investment company structure. There is another layer to consider, that is succession planning. In Australia, the forced heirship isn't an issue. But if you have family across borders or property in civil law countries, a foundation can bring legal certainty. You can structure the bylaws to define exactly what happens upon your death, removing ambiguity and potential disputes. That brings up another important point, that this isn't about hiding wealth or avoiding tax. A DIFC Foundation, when used correctly, is a fully reportable above-board structure. You can register it with the ATO, disclose your interest, and ensure you comply with both UAE and Australian obligations. Unlike some offshore trust where you have to give up property ownership and control to other trustees. That peace of mind is what makes it so attractive for high net worth Australians who want control without risk of losing your assets. Of course, it is not for everyone. If you want full control over your assets at all times and have no issues with higher domestic tax exposure in Australia, a foundation may not offer immediate benefit. But if you are looking to separate control from benefit, build intergenerational wealth vehicle, or simply structure your global assets in a more bankable, compliant, and tax efficient manner, then it's a serious option that is worth exploring. And that's where expert structuring comes in. The details of residency, effective control, CFC reporting, and succession planning requires careful design. A poorly structured foundation can cause more harm than good, including double taxation, non-compliance, or banking issues. So if you are an Australian citizen exploring global options for asset protection and succession planning, don't discount Dubai. It's not just a tax-free city, it's a well-regulated financial center with legal tools that rival top-tier jurisdictions. The DIFC Foundation is one of the most versatile structure available today. If you own a business or real estate, don't wait for legal or health crisis to start thinking about protecting your wealth. Many people think asset protection is only for ultra-wealthy. But the reality is that some of these solutions cost as much as setting up a free zone company in Dubai. If you want to secure what you have built and ensure your legacy, you can request your free and customized asset protection plan by clicking the link in the description below. And if you're serious about building long-term financial security, you should really check out my next video right here.